All right, good morning, everyone. Let's kick it off today, round out the week, Friday. Um, all right, last night we had a little bit of a non-event on the back of some an exciting session the previous day in U.S. markets, and yesterday we started with what looked like it was going to be some big volatility again. In the morning, you can see there first red bar on the Nasdaq. In fact, that's actually during the session. If you look pre-market, I think we were lower than any point at the lows of the days on the Nasdaq and on the S&P 500. So I think it was a relatively decent result. We still finished down. Market wasn't able to really claw anything back from the previous day, so I don't think it's convincing that you can just step in and start buying here. We did have a couple good data points out yesterday. So we've got PMI numbers, which have risen to a 6-month high. We had jobless claims numbers that were solid. We had the on the back of that, we had Treasury yields rise again, back up to north of 2%, I think, to close out the U.S. session, or right around 2%. And we're hovering just below that this morning. I think that for me, it's one of the things we've been talking about a lot. I still think that this is the most important thing in the markets at the moment. I saw a couple guys come out yesterday and saying, that after yesterday's data points, pretty much is locking in a June rate hike. I think the market's is starting to pull it forward a little bit. You saw, like I said, we're seeing Treasury yields rise, very important, obviously, and this potentially could be what I think this is what's maybe rattling markets here. Originally after the Fed spoke, last week, we got a big bump up that first day, and then a couple days we just we couldn't get anything going, and then we started to roll over after that. And now as we see Treasury yields rising again, I think potentially it could put a little bit more pressure on when you're starting to see dollar strength again. And the market's nervous about it. We've been in such a easing pattern for so long that it just I think that the market's really afraid that there's a major unwind to come. And so if you think back to 2013, when the Fed came out and talked about tapering down on QE, in the taper tantrum, I mean, we decimated for a handful of for a couple of weeks in a row, and until they kind of came back out with a more dovish tone. So the market's probably is going to worry about this. Shouldn't be a big deal. I mean, they've been as accommodative as they can be in terms of saying that they'll do it gradually and everything else. But I think this is a big thing in markets when it does start to happen. And markets are obviously forward-looking. We're getting more and more clarity now that it's going to come, in either June or July. So I think it's really important. And watching Treasury yields, 10-year Treasury yields, are telling us everything there. All right. If we look at Asian session, a bit of a mixed bag. Half the market's up, half the market's down. The Nikkei actually sticks out to me a little bit there. Maybe a little bit of weak inflation data hurting a bit, but Australia having a bit of a bounce. Banks going to the other side of it today. But I mean, there's no leadership at all in my mind out of Asia, so I just don't think that we can take. I don't think we can look at any of this. I think we're still watching U.S. markets. I think we're still watching U.S. interest rates and the dollar, and that's going to be our guide going forward, along with trade action. If we look at the chart of the day today, we've got this is the chart on capital goods orders, and I think one of the things that this chart really runs in tandem with is when you look at the oil spending, all the capex that's been pulled away from the oil sector, and obviously that's driving down capital goods. So I mean, the other day we got that weak durable goods print. That could obviously be a big thing to sit there and drag on some of those indicators at the moment. So something interesting to look out for going forward. But I think that's one of the reasons why that print was as soft as it was. No corporate action to speak of today in terms of market data. We had a handful of things out of Japan that all came out dead in line. We've got nationwide house prices out of the UK, then we've got quarter-on-quarter annualized GDP numbers in the States and University of Michigan sentiment. So, all right, let's get into the maps. Hey, Spike, are you behind me? Five. Okay, the first thing that we're going to look at this morning is the Aussie future. We're going to go back to the Aussie future and have a look here because I think yesterday it was significant. When we talked about this, the failure to break out up here, the reversal the next day, we just had too many failures, and then we finally made that reversal day, and I think that was the kind of nail in the coffin for yesterday. Just really, there wasn't really anything else that we could do. If you look here on the closes, these recent closes, we managed to hold that. That's at around, I think, right around 458. There we go, 45800, maybe 45,810, somewhere in there. We managed to hold that on the close yesterday, and the wicks as well. You can see there that we also managed to kind of hold the day's lows, which was very similar to the day's lows within a handful of points to the day's lows before. I think we bottomed at 690 yesterday. For me, this is these are the absolute levels where we look to trade around at the moment. If we get below these intraday lows at 46,080, 45,680, 45,690, then I think we immediately come down here and test our only last surviving level of support, which is at 45,550. That drops, then it's good night, nurse, and this place is probably going to get waxed. So I mean, that's, to me, those are our levels. They're really definitive. I just don't see, to me, there's no confusion around the levels. I don't think that you can argue with them at all, and that is good because it makes it easy to define your risk. So I think that's what we're looking for this morning, today's session and on into early next week. Those are the sort of levels we're going to look at. If we can hold today and start to make a bit of a reversal, I think if we get about 46,000 again, which is really where we opened up this morning, and obviously it's a bit of a round number, then maybe we can start to gain some traction and move back to the upside. All right.